Hey, students of iMarkets Live! The following Crypto Academy video is designed to help you understand cryptocurrency expectations. Now, this is a very new space. The industry is expanding rapidly, and today we are going to help set the momentum for you to trade consistently in a way that matches whatever it is that you're looking to achieve with cryptocurrency.
Remember, we're all learning together and it's essential you implement the knowledge within. Should you accept the full risk and responsibility, please continue forward with the training now.
This lesson will focus on answering the following questions. Before we continue, pause the video and read through them, and be certain to minimize any distractions. The rapid advancement of cryptocurrency and the technology that it is built upon is really becoming a dominant influencer within today's society. And whether you choose to trade or invest in the upcoming technology, you really have to take into consideration how much are all of your monthly expenses. This is a very good place to start even if you've already taken initiative and progressed in some way within the cryptocurrency space, if you bring it back to a place of understanding how much money is going out on a monthly basis, you're going to have that clarity in your mind to allow yourself to accumulate risk capital that you can then diversify into your crypto portfolio. When we talk about risk capital, how much are you actually going to allocate towards trading? And contemplate the money that you put into the market. Is it going to negatively influence your quality of life for you to go and move the money into the market? You should not be taking the money that you need for basic necessities, feeding your family, paying your rent, all of these things that are priorities. They should not be leveraged for your investments. And go beyond that. Consider what types of returns you expect on an annual basis and speculate. What type of return do you expect annually? Think of what it would be like if you were to rely on the banks to give you a positive return on your investment. You'd be lucky to get 1%. So even if you take a more conservative approach, something like 5% in the year, it is going to substantially increase the potential for a positive return on your investment once you make that decision to take control of your finances. Think beyond and consider if you are going to continue accumulating capital in your portfolio. Are you going to compound upon your gains to allow it to grow at a much more exponential rate? And more than that, which markets are you going to diversify yourself across? Because there is so much available for us to trade, whether it's in the cryptocurrency space, even if you're invested in the foreign exchange market. Perhaps you've even contemplated stocks, and more often than not, it is in your best interest to focus on particular markets and get in tune with how price moves, especially if you're going to be doing active trade management. For your long term investments, this is still a very important question to consider so you can set the right expectations by having a goal in mind over a period of time. And once you start, with an entire year from that broader perspective, you can focus in on what that's going to look like every 3 months and even go further to consider what is that going to look like on a month to month and what actions do you need to take every single day to be certain you are on track to achieve the goals you set out for yourself. The next thing that we're going to consider is how much time are you willing to commit each and every single week to making this goal a reality? And I'm not just talking about studying, hopping on IML TV, going through the academy, plugging into the leadership calls, talking with your mentors, and really immersing yourself in the community. You have to think beyond the planning process itself, utilizing your trading journal, making sure that you are taking the necessary time to reflect after the implementation process, going in and doing technical analysis, understanding fundamentals that influence each market that you're involved within. Only you have the power to take action. And without that implementation, you could read all of the books in the world, you could watch all of the education, but you will not see results if you do not implement on the knowledge. When we're looking to calculate what has to happen, speculating and planning out our reward to risk in advance, having a basic understanding of what has to happen in the market for us to achieve our goals is very important. When you are actively trading and utilizing leverage, if the price of Bitcoin were to move from 10,000 down to 9,000 and you had entered a sell position, you could expect off of that $1,000 price change to be trading with a micro lot, a $100 change in your account. On a mini lot, a zero point 0.1, you could expect dollar for dollar, $1,000 price change would be a $1,000 change in your account. When we're looking at a standard lot, all we're doing is moving the decimal place. The price would still only move $1,000 in the market, but that would be a $10,000 change in your account. If you look at something like Bitcoin Cash, a little bit less volatile, still a very nice cryptocurrency asset that you can participate within. If the price were to go from $850 down to $825 on that $25 price change, exact same mentality. And if we were to trade a standard lot, we could expect a $250 update within our account balance. Now, this information may vary depending on which broker you're trading with, so be certain that you demo and get familiar to make sure that they are calculating the price movement in accordance to the numbers that are shared within. When we talk about something like Ripple, this particular asset is calculated a little bit differently than Bitcoin or Bitcoin Cash. If the price were to move from 65 cents down to 50 cents off of that 15-cent movement, a mini lot, a zero point 0.1, would result in a $1,500 change in your account balance. So you can see it's pretty substantial. There's a lot of opportunity. Let's go ahead and do a quick comparison to Forex, and we'll take a look at gold as well. Because even though understanding price movement takes a little bit of time and some practice, it is fairly simple, and you can leverage tools like a calculator to help keep you on track. So I'm going to show you that. So right now we're looking at Ripple on the hourly candlestick chart. Price is trading at 48.5 cents. So if price were to move 10 cents up to the 58.5 cent level, can go ahead, we can identify what that would look like. And if we were to use a calculator to plan out in advance what type of change in our account balance we could expect if price were to make that movement, what we would have to do is this. On the calculator, because we are looking for price to move up, we're going to start with the higher number. So 0.585 subtract 0.485, that is going to give us a 10-cent increment. And what we're going to do at that time is enter what our lot size would be. If we were to trade a micro lot, that would be the equivalent of 1,000 units of currency. If we were to trade a mini lot, that would be the equivalent of 10,000 units of currency. So you can see that it's fairly easy to plan this in advance because all we're doing is moving the decimal place. If we were looking at a standard lot, it would be 100,000 units of currency. So if we were to trade a standard lot and price were to successfully rise by 10 cents, we could expect a $10,000 change within our balance. Keep in mind, we have to consider the spread and any commissions that the broker may charge, including the swap fee, but this is a very good place to start when you're looking to just understand the basic mathematics of what has to happen in the market for your account balance to experience a change. A similar way of thinking can be applied over in the foreign exchange market. Looking at something like the GBP USD, we can see that there is 5 decimal places after the 1. If price were to go from where it is right now at 1.4 down to our white line at 1.389, that would be a 110 pip movement. We do have to move that decimal place to the right to account for how this particular asset is structured, but it is the exact same mentality. If we were trading a mini lot, 110 pips, we would be getting dollar for dollar. So it is a little bit different because on something like Bitcoin, with that same example, price moving from 10,000 to 9,000, that $1,000 change is the equivalent to a 1,000 pip movement. So we don't see 1,000 pip movements in the Forex market too often. There are examples that we could look at, such as this candlestick right here, the Brexit candle, where we had a high of 1.50186 on this particular brokerage. We had a low of 1.32263. So in that day, price moved about 1,800 pips from the high to the low of that particular candlestick. We're looking at the June 24th, 2016 candle on the GBP USD through the FXCM broker. And this data will vary depending on which chart you are looking at. One final example that we're going to look at is gold. And if something like gold were to move from $1,325.82 down to 1,300, that would be approximately 258 pips based off of where the market is at this particular moment. So the exact same math could apply. 258 pip movement, that would be the equivalent on a standard lot of $2,580. On a mini lot, 258 pip movement would be $258. So just keep it super simple for yourself. Make sure that you're practicing the implementation side on a demo account until you understand how to easily plan out that reward to risk in advance, because you're going to be setting yourself up for success if you know going into the trade before you've even entered the market how much you're risking, what your reward is, where your entry price is going to be, and that right there is going to give you that clarity and confidence to size your trade according to your account balance. In summary, your expectations will change over time, but a plan of action is required to progress as a trader. The risk appetite that you have, are you emotionally resilient? Which markets are you participating within? What are your expectations? More than anything, you know yourself better than I do. And you have the power within you to transform and allow your trading business to thrive right now at this moment in time. And calculating the price movement can be very simple if you utilize a calculator. And once you take the time to plan out trade parameters like your reward to risk and your trade size, because these things can be easily identified before you enter the market, just imagine how much more confidence you will have in your trading decisions once you take that little bit of extra time doing your due diligence.
Be sure to leverage our resources and actually implement the education. Because all trading requires is persistence, discipline, and acceptance that you can learn this skill set.